This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 30th, 2011. Our time is 8:38 Mountain, 10:38 Eastern. Radio show runs on 630 CHED in Edmonton, also AM 640 in Toronto. If you ever miss a radio show, the shows are archived at Harold's website, HESradio.com, HESradio.com, also rarecoloreddiamonds.com. If you'd like to have the companion to our radio show, which is our newsletter, we send it out free of charge every week via email. New information every week. It's all new this week. If you'd like to receive it, you can give Worldwide Precious Metals a call at 1-866-623-2002 or speak with Harold at 1-800-432-1022. Harold, it was a short week, a thinly traded week due to all the traders being away during the holidays, and we saw some exaggeration to the downside, and we're seeing some bounce to the upside today. But people really shouldn't gauge the markets based on what's happening in a very thinly traded few days prior to New Year's Eve and New Year's Day.
You better believe it. And we do wish all of our listeners and friends a very, very happy New Year. 2012 is going to be a very, very interesting and could be a difficult year, but we're on top of things, and I just, hope for everybody, and I know Randy mirrors my thoughts, that we all get through these difficult times and do extremely well, and that's the reason for the radio show. We truly appreciate, your patronage and your loyalty to us, and again, Randy and I truly appreciate listening to us throughout this year and the 10 years that we've been on the radio, and we're looking forward to many, many more. So, again, thank you very much for listening to us for all this time, and we continue to do a great job for you. There's no doubt that the markets are confusing and concerning. During the holiday season, it's not unusual to see these type of moves. Basically, what we saw this week was the market testing the downside, and gold basically is trading today as we're taping the show on Friday at $1,571. We're up $24.60 on the day. The silver's market is up 38 cents. It's trading at 28.25. You got the platinum market trading at 1,400. Palladium at 651. They're both up on the day. Platinum's up $23. Palladium's up 17. You've got the oil market trading at 99.62. So it's been trading most of the week right at around the $100 level. Very, very bullish on crude oil. We believe crude oil, even short term, with the volatility this going into 2012, we could literally see crude oil double in price, and we could be looking at crude oil trading in the $150 to $200 range before 2012 is over. You've got the U.S. dollar, which is the problem at this point, trading down today, down 21 points, but is still above the 80-cent level, and that's a danger area for me for the short term, because the U.S. dollar is a weak currency. Just to put things into perspective, when the gold market hit 1,900 and silver hit $50 earlier this year, the U.S. dollar was at 73 cents. Now it's back up to 80 cents because of the weakness of the euro primarily, and you've got gold down at $15.70 and silver down at $28. So that shows you the input and the relationship between gold, silver, and the U.S. dollar. And again, the reason that the markets are falling at this point is primarily because the U.S. dollar is trading over 80 cents. Now, there's two different areas that you really need to look at when you're looking at the precious metals. And again, as I try to relate to you guys every week, don't get emotional over this. Trading isn't emotional, and when you make it that way, all of a sudden you start to make the wrong moves. We should be trading on logic, and we shouldn't lose sight of why we're in hard assets at this point and why I feel that we're assured of these markets going forward. First of all, there's two different areas that you look at when you're determining to make an investment. One is the technicals, which is the charts and that type of things, and the other is the fundamentals, which is the worldly events that could alter the markets in some way. Now, basically, the technicals tell us that the markets are weak and they are trading lower based on the strength of the U.S. dollar and all the concerns that are going on worldwide. You've got banks that are selling any assets that have any value because stocks have been falling all over the world. So again, at this particular point, you've got a technical situation where the charts on gold and silver look weak. And basically, the way that I see it is that if this continues, and it should continue into the first month or two of the new year, it could bring gold down to 1,400, which is livable. Silver could break $26 and possibly go to 22 to 20, which is also livable. Oil, again, right now is at 100, and it could definitely go to 200, and the U.S. dollar could go to the 86-cent level. So if the U.S. dollar goes to 82 cents, which is about 2 cents away from where it is right now, that would put silver at about $25. If it ends up going to 86 cents, like it did in 2008 when the markets melted, it would put silver at $20. But even those two prices are livable, because the bottom line is that there's still three major situations in the marketplace that will push the price of gold substantially higher. Actually, four. But the first thing is the European debt, and that's where most of the confusion is at this point, because what's happening in Europe is horrendous. You've got countries that are going bankrupt, and they don't know how to deal with it. And you've got so much debt going on, and they just don't know what to do at this particular point. So, what's happening in Europe is affecting the currency markets, and the currency markets are really what you have to look at this point. It's going to tell you the direction short term that these markets are going to go to. And again, every indication that I'm looking at is that short term the U.S. dollar is going to rally because the euro is weak. It's going to push the metals a little bit lower. But again, if you own your metals outright, like I've always recommended, these moves to the downside really don't mean anything to you. It's only when you heavily leverage your position that these situations will affect you. But if you own the metals outright, then these situations are only pullbacks and additional buying opportunities. And it takes all the stress out of the market. So you've got the European debt, which means that they don't have the money to bail these countries out of trouble. It means that they go and they start to print money like we've seen in the U.S. and other countries. That, bottom line, no matter what happens, is extremely inflationary because you're creating additional dollars. Then you've got the U.S. debt situation, which is almost identical. You've got the printing presses going full-time in the U.S., printing and printing new money. And the fact is that the debt keeps getting higher and higher and higher in the U.S. The economy is improving. There's no tax money coming in. And basically the U.S. is in huge trouble, and that's extremely inflationary. Added to it, you're probably going to have a war in the Middle East this year. I'd give it about a 75% chance. Now, we talk about Iran and their ability to cut off the Strait of Hormuz. In the newsletter, there's two major articles explaining exactly about that this week. And all Iran has to do is cut off that strait where 40% of the oil goes into the Persian Gulf, and you're going to see the price of oil spike. It could go to 150, it could go to 200, it could go higher than that. Then what's going to happen after that is that because the higher oil prices are going to affect the world economy, the U.S. is going to be sitting with warships sitting in the Persian Gulf, starting to threaten Iran to let oil through the strait, and that's when all the problems are going to happen. It is not unusual during these unbelievable times that war will break out or something like that to distract people from thinking about how bad the economy is and concentrating more on what's happening elsewhere. So again, 2012, confusing, concerning, stressful. If you don't do the right thing, you're going to find one mistake that you make can almost wipe you out. And one of the biggest mistakes that most people are going to make this year, going into 2012, is holding on to stocks. There's an excellent chance of a stock market crash in 2012. There's just nothing bullish going on in the marketplaces in the United States or in Europe. So the chances of a crash in the market in 2012 is not only real, but it could be substantial. And there is absolutely no reason to sit there and let all of your hard-earned money disappear because you don't want to make the move and get out of certain investments. And again, we saw it happen in 1999. It almost wiped everybody out. We saw it again in 2008 when the Dow dropped from 14,000 to 6,500. We're now at 12,000. It would not be unusual for the market to drop in half again. So again, if you're sitting with stocks and mutual funds in your RSPs, in your personal stock accounts, you may want to turn those into cash. Because basically, what you're going to find is that if the stock market falls as we anticipate this time, it's going to wipe out most people. You'd be much better off sitting in cash with some gold and diamonds than sitting in the stock markets at this point where you have a chance of losing all of your money. So again, 2012 is going to be an extreme year. It's definitely got our attention, and not only ours, some of the most brilliant people in the world are saying things very similar to what we've been saying for many years now. This is such a dangerous time that we're going into. You're much better to be safe than sorry. It's not about making a lot of money right now. It's about protecting what you have. And again, at the seminar that we did in Edmonton, where 800 people showed up, our recommendations were 60% cash and 40% in gold and diamonds and silver type of thing. So that has not changed. In fact, I think it's even more sensible to be conservative going through these extremely dangerous times. And if we do this correctly, we will come out of this doing extremely well and get ready for the next market. And again, hopefully we'll be right on top of that. But at this point, we've got about 5 years to make a ton of money and to protect what we have. The first thing that I would do is get out of any stocks and mutual funds and get on the sidelines on those. Number two, if you're not in the gold and silver market, over the next few weeks, you're going to find that these markets should come close to bottoming out, and I would look to buy silver, in the lower 20 range and gold in the 1400 range. I would also be a major buyer of oil. I believe that oil is going to at least double in price. And again, you've got to get something into the diamond market, which we'll talk about also. It's the safest investment, and it's the only asset that can be traded and sold in another currency, with currencies going under. Again, these are very confusing and dangerous times. All we want to do is lead our Canadian clients through this maze and get through this safely.
We've done the show for 10 years, and this is 1 year when we look out over the horizon to 2012. It is really hard to get a real bead on what potentially could happen. There are lots of different roads we could go down. But I agree with Jim Sinclair, who said this week, political priorities run the Western world. If you believe that quantitative easing is not and will not occur to infinity, you are an ostrich with your head stuck in the ground. If you think there is a willingness to address the debt problem via austerity anywhere in the Western world, you are in for a shock. That, according to Jim Sinclair, that's why he believes it's quantitative easing, as he says on his website, to infinity. Also, Robert Goldfarb, who runs the Sequoia Fund, said, "My own feeling is that we're just repeating the housing bubble in a different form. We've substituted an unsustainable buildup of government debt for what is an unsustainable buildup of consumer debt. This one really feels worse to me and more dangerous. I think we're living in a time of false prosperity." Get our newsletter. It is the companion to our radio show. We send it out free of charge every week via email. You can get it from Worldwide Precious Metals. That's the company Harold recommends you use when it comes to investing in precious metals. Their telephone number, 1-866-623-2002. The website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. We should mention that next week we will have our prediction show. At the beginning of every year, Harold does his predictions. Next week, Harold will be in the United States. John Williams of Shadow Stats, using GAAP, and that is general accounting principles, based on the 2011 U.S. Financial data. The actual 2011 federal deficit in the United States topped $5 trillion, not the 1.2 that they're talking about, using GAAP-based principles. That's generally accepted accounting principles, standard everywhere. The United States was in debt $5 trillion, not 1.2. And U.S. government debt and obligations top $80 trillion, and the long-term U.S. solvency and hyperinflation remains virtually a certainty, according to John Williams. And he was interviewed by King World News, and he says the U.S. has $100 trillion in debt and obligations. It's something that people have to be aware of. Last week we were talking about California. The pension plans that they have for their public workers, there's an 82% chance that they will fail. You need to have some precious metals in your portfolio as that insurance policy. And one thing to keep in mind, this is a week where you really need to read the newsletter, because there are so many top-flight analysts who are saying, don't get spooked out of the precious metals markets based on thin trading. John Hathaway, He said in an article from King World News that central banks are going to begin dumping dollars for gold. He said the action is what you would call expected in a thin market. What's been happening here in the last week, the moves are exaggerated. The people that have shorts on, which has been the right trade for the last several months, they are just pushing it to the limit on the downside to make their year. Obviously, it's uncomfortable to see this kind of action. To some extent, you have to look at it in the context that we see it, which is thinly traded markets. Also, Egon von Greyerz out of, and this is a guy who is a top-flight person out of Switzerland. He believes gold is going to trade from 3,000 to 5,000 in 2012. He was interviewed by King World News, and he said he's not really surprised by what's been happening in the market. He thought gold could go down to 1550 support and maybe 1420. He says, in my view, that would be quite normal in a very thin market, and I think that it probably will happen by the year end. He also went on to say that this is all a thin paper market. We have not seen one single physical seller of gold or silver at these prices. So it's just a manipulated panic in paper at the end of the year. Of course, it's easy for anyone who wants to intervene to push the prices down even further in the thin market. So I think that's what's happening. I wouldn't worry in the slightest. And I think, Harold, that's what people have to understand. As you said, don't trade with emotion. Don't invest with emotion. Invest with logic. And here we are, thinly traded markets. And quite easily, in the first quarter of the year, we could see precious metals go down until it gets to a point where they start cranking up the printing presses again. And I agree with Jim Sinclair. You have a U.S. election next year, and it's going to be a very, very dicey time in the United States. We're seeing the housing numbers are not great. Jobs numbers are not great. They have massive deficits. In fact, Obama this week, the Obama administration asked to extend the debt ceiling, and it's being extended from 15.194 trillion to 16.394 trillion, and that is a request that will go through to an agreement that happened earlier in the year by all the members of Congress. So they're going to have a debt ceiling of $16.394 trillion. And Harold, that's a massive debt. And the truth is, eventually, the United States will be like Greece or be like Europe. They will have to deal with this situation one way or another. It's just a matter of the timing of it all.
Again, you're 100% right. And the thing is that they believe, through the Federal Reserve, that they can print their way out of trouble. But if that is what the game plan is, and I don't see any other way that they are going to get through this thing, which again is only prolonging the agony, it's just the most inflationary thing that you can do. Again, I've traded these markets for 35 years. Without complicating things, when you create, as many dollars are being created, it's like any other commodity. If you created an oversupply of oil and the demand isn't there, the price is going to fall. It's the same with wheat and the other commodity, and gold is a commodity, so is currencies. So if they're actually creating all these currencies, it weakens them and weakens them. There's no great demand for it. So again, we feel that we know that they're going to print their way out of this situation. They're going to continue to print, and that's going to bring gold to $5,000 or $10,000. And the thing is that the markets may be down right now, and we've seen the situation happen many times. But all of a sudden, one event will totally change the technicals and fundamentals of the market, and next thing you know, gold's trading back up at 2,000. So again, it's not a market that you want to be out of. If the market has come down and you're nervous about it, again, you shouldn't be leveraged. You should be sitting in the actual paid for metal. The fact is that these markets will remain very volatile for the next few years, but volatility is what's going to get the markets up to these much higher levels. I still believe very strongly. I have not sold an ounce of my silver, gold, platinum, or palladium. I have not sold one single diamond that I'm holding for inflationary situations. I'm 100% positive that we are going to have massive inflation, and that is going to increase the price of hard assets tremendously. It's not, that I'm sitting there hoping for this situation. It's an action-reaction thing. When you do what they're doing, inflation is going to rally, and so is it with the price of oil and food. So there's no doubt in my mind it's only a waiting game, and we've got all the time in the world. We've been in this for 10 years. We've done extremely well from 250 to 1900 down to 1500 $2,400 in gold, and I think the next move's up to 22 to 2,500. Same thing with silver. It went as high, it started at 380, went all the way up to 50, pulled back to 26. I believe it's going possibly lower short term, and then I think it's going to $100 to $200. So as long as we own the metal, these pullbacks don't mean anything to us except gives us a buying opportunity to average down and buy more silver and gold.
The telephone number to invest in precious metals, there's only one company that Harold recommends you use. That is Worldwide Precious Metals. Their telephone number, 1-866-623-2002, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com. Harold spoke about the stock market going down, and it was interesting. I had Bloomberg on in the background as I was working, and they touched on a story, and I was able to find it and put it in the newsletter. United ICAP senior technical analyst Walter Zimmerman says the S&P could rally a little further into January for beginning a traumatic decline for the rest of 2012, dragged down by weakness in Europe. How traumatic? You might want to sit down for this. He thinks the index will reach its peak in the 1293 to 1311 zone, then start a sharp and sustained drop until December. His downside target is around 579.57, and that's right, 579. The index would have to wipe out the March 2009 lows and fall by more than 50% of the current levels to reach that target. They're talking about a 50% fall in the stock market. And Harold, I don't see people like Ben Bernanke and the people who are in Congress. There are those who believe that quantitative easing won't happen again because Congress won't allow it. The truth of the matter is, if the stock market starts plunging again, which is a very, very high possibility, it would not surprise me at all to see them crank up the printing presses again and try and boost the stock market, especially during an election year. And it's going to be a very tough election. My prediction is it's Barack Obama versus Mitt Romney, and it's going to be one heck of a battle. But I would be very surprised not to see quantitative easing. We're already seeing it in Europe. What they did with the banks last week, giving them all that money, that is a form of quantitative easing. And Harold, you look at the technicals as you touched on, and short term there may be some damage, but mid to long term they are looking good. But if you look at it fundamentally, you have the sovereign debt crisis. Nothing has changed there. Still problems in Greece, Spain, Portugal, Italy. Ireland is still having its challenges. You have the United States with massive debt problems, states that are bankrupt. You have cities that are bankrupt. You have pension plans that are massively underfunded. And it's a financial house of cards on some level. And I was sitting at last night thinking, I've got to get my mind off this because it's so depressing when you start thinking about it. But we are warning people this could be a very, very tough year, and you need to be protected. We have about 30 seconds left here.
You bet. All you want to do is take the risk out. Because the fact is, if there is a chance that this could happen and it could have this adverse effect on you, it could wipe you out financially, just get out of it and sit on the sidelines. It's not about making money right now. It's about preserving capital. So again, let's be smart about this. If some of the most brilliant people in the world are saying that we've got the potential of a gigantic crash, get your money out of that market because, again, we've seen it happen before and it's ripe to happen again. All we want to do is get through these times in a safe fashion.
To invest in precious metals, speak with Worldwide Precious Metals, wwpmc.com or 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel and me, Randy Marshall. It's the World Financial Report on radio, December 30th, 2011 edition. We're taping the show at 9:03 in the morning Mountain, 11:03 Eastern Time. Radio show runs on AM 640 in Toronto and 630 CHED in Edmonton. If you ever miss a radio show, you can catch us online, hesradio.com. Also, Harold's website, rarecoloreddiamonds.com. To invest in precious metals, the company Harold recommends you use. It's a Canadian company. They've been in business over 10 years, the entire time of this bull market. They've been through all the ups and downs. They have the knowledge to help you invest in these markets. And they'll help you start your own precious metals investment account. 1-866-623-2002. Their website, wwpmc.com. Harold's website for diamonds is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond of the week, you can find it on Harold's website. This week's diamond is a 1.81 carat fancy intense, internally flawless, cushion-cut yellow diamond. The color of this diamond is amazing, and its proportions make it appear much larger than its actual size. You can see the video of this featured diamond on Harold's website, and it is an amazing video, and it does look like a massive, massive diamond. So speak with Harold and speak with him about the featured diamond. One of the stories we have in our newsletter, if you'd like to get our newsletter, you can speak with Harold by calling him at 1-800-432-1022 or connect with him at rarecoloreddiamonds.com. Get the newsletter from Harold because there's a very good story that Bloomberg had this week. Diamonds to outpace gold on Asian spending. Diamond prices are poised to rise for the next 4 years, outpacing gold as increased spending on luxury goods in China, India, and the Middle East outpaces supplies of the precious stones, according to analysts. And it's a long story, but Harold, long story short, we're heading into a time where there's a supply-demand crunch. The old mines are winding down, no new mines coming on. There is a lack of supply of diamonds, and there is becoming more and more interest in diamonds all over the world, in particular China, India, and the Middle East. And it's going to be an interesting 5 to 10 years when it comes to the diamond market, because we know that rare-colored diamonds are very, very rare to begin with. And they're talking about the white diamond market. So what will that do to the colored diamond market? It will make it even rarer than it already is. So prices, you would think, would have to go up dramatically.
Well, they certainly will, and they certainly do. These diamonds go up by 25% a year anyways, but the chances are is that we're going to start to see much larger increases in the price of colored diamonds. They're so rare, and they do so well during times of high inflation. But add to it the fear of what's happening worldwide with currencies and what's happening in Europe and everything. The fact is that people want something that's safe, and diamonds are extremely safe. Rare colored diamonds like we sell never ever decline in price ever. I've been in business 35 years. We've never seen a price decline in rare colored diamonds, but what we have seen in 1979 and 80 was an increase of 500% in 2 years when inflation hit. And again, you know how bullish I am on inflation. This is why 7 years ago we started recommending that you invest in the rare colored diamond market. Now, this is not a fund like a stock that you invest in. This is the actual diamond. We ship the diamond directly to you. You own it. It's a beautiful diamond. They're all GIA certified. Means the Gemological Institute of America certifies these diamonds, and we ship them directly to you. You own them outright. We send you our newsletters each week. We send you auction results, and then when the time comes to sell the diamond, we sell it for you. We own our own auction business, so we do everything for our clients. The reasons that you want to own diamonds, again, they're an asset that are extremely difficult to get. We recommend 2 different types of diamonds. First of all, what you should know is that diamonds come in all different colors. And what changes a diamond to a different color is certain minerals within the ground. For example, a diamond can turn blue with boron in the ground. And basically, when a diamond turns blue because of boron, it could be, to compare it to 2 diamonds coming out of the same mine. So let's say the mine produces a white diamond, and because there's boron in the ground, it produces a blue diamond. They're both compressed carbon. They've both been in the ground for 3 billion years. They both came up through the ground through a volcanic eruption, but because there was boron in the ground and it turned one of these diamonds blue, if you put these two diamonds together, the white diamond's worth about $2,500 and the blue diamond is worth up to $2 million just because it turned blue because of a mineral. So, red diamonds are the most expensive. They go for about $2.5 million a carat. We're not recommending necessarily that those are the diamonds that most people are going to buy because they're out of most people's price range. The same thing with blue diamonds. Blue diamonds recently, in the last 5 years, 6 years, have gone up 10 times what their price was because of a scarcity of those diamonds. Then comes the greens and the pinks. Now, pink diamonds are some of the most sought-after diamonds in the world, and those are some of the diamonds that we recommend because 95% of all the pink diamonds are produced in one mine. It's called the Argyle mine in Australia, and it produces 95% of the world's pink diamonds. It's a very small number. If you held your hand out and they poured the entire year's production in your hand, it would cover the palm of your hand. You're talking 200 carats of diamonds. It's minuscule. Well, this mine is going to close. It's going to close before 2018. That means there won't be any more pink diamonds. And the price of pink diamonds can go up 10 times what they are today. And these diamonds are still reasonable enough at this point. You can get into the pink diamond market starting at about $20,000, and in 10 years from now, we predict that those pink diamonds can be worth as much as $200,000. $20,000 now equals $200,000 in 10 years when there are no more pink diamonds. How can we come up with those numbers? Because we saw the same thing happen with blue diamonds. In 2005, they were $200,000 a carat. The mine closed down. By 2008, 3 years later, they were trading at $1.4 million, 7 times what they were, and now try to find a vivid blue diamond, flawless, under $2 million. So that's what happens when you cut off the supply of any commodity. If all of a sudden there was no more oil around, the price would go through the roof. If all of a sudden there was no more wheat, corn, or soybeans, the price would go through the roof. It's the same thing with diamonds. When you take away the supply of diamonds, the prices go ballistic, and that's what's happening at this point. We anticipate that the price of pink diamonds, which go up right now by about 25% a year, they double every 4 years in price, we anticipate that they're going to start to take on a life of their own. You're going to start to see that these diamonds will start to double every year and 2 years in price. So we're going to see massive increases, and we will see a large increase in the price of these pink diamonds going into 2012. My suggestion is to get out of the very risky stock market and put your money into some diamonds. They're safe, they're portable, it's like real estate in your pocket. You can carry millions of dollars to do that with more than $10,000 in cash. It's also the most dangerous financial times in world history. You've got countries going bankrupt and currencies changing. It makes a lot of sense to own an asset like a diamond that if everything goes wrong, you've got an asset that could be sold in Japan for yens, England for pounds, China for won. So, again, there's never been a more important time than to invest in diamonds than it is right now. I've been through the run-up in 79 and 80, and again, I think that the inflation we're going to see this time around is going to make 79 and 80 look like it was nothing. So I very heavily recommend that you look at our pink diamonds from the Argyle mine. They're amongst the best investments you can make. They're very safe, and it's the best chance you have to make money in an inflationary market along with gold. The other diamonds that we recommend are yellow flawless diamonds. They have to be flawless. And these diamonds double every 4 years in price. Without, these world crises that are going on, it's just been a great investment for the last 30 years. These yellow flawless diamonds go up 25% every year. They double every 4 years. And again, my clients that buy those diamonds put them away for retirement. They're much safer than stocks. If you were to take $20,000 and put it into a yellow flawless and $20,000 into the stock market, in 4 years from now, that yellow flawless has doubled. I highly doubt you'll see the same return on your stocks, especially with as dangerous as times are right now. I would definitely look to get out of risky investments and put money into safe investments with the uncertainty of what's going to happen in the next 5 years. One thing I am very confident on is that we are going to have massive inflation. And a diamond that you could buy today for $20,000 could be a $100,000 diamond in the next 5 years. So we're recommending, and I invested a tremendous amount of money in rough diamonds. That means that we go directly to the mines, we buy their diamonds before they're cut and polished, and then I give those diamonds to my cutters, who are amongst the best cutters in the world. In fact, my cutter cuts 80% of the flawless yellow diamonds in the world. So 80% of the diamonds only go to my clients, and they are the highest quality diamonds. If you were to sit at my desk and look at 100 yellow diamonds, you would be able to pick our diamonds out of the other 100 diamonds. That's how strong they are. I will only buy diamonds or cut diamonds that are 8s, 9s, and 10s out of 10s. Anything under that, really goes to our competition. The fact is is that these yellow flawless diamonds, we buy them while they're still uncut. We give them to our cutters, and they cut and polish these diamonds. That normally takes about 3 months to cut and polish one single diamond. Then what they do is that once it's cut and polished, they send it to New York to the Gemological Institute of America, known as GIA. They're a nonprofit organization, and they grade your diamond. So they'll look at this diamond, they'll put it through all of the tests, and they'll come out with a report on that diamond. You never ever buy a diamond without a GIA report. So that's it. So once it's GIA certified, then the diamonds come to me, and then I offer them to my clients. We ship these diamonds directly to you. We pay for the shipping, the insurance, and the duty coming into Canada. We keep in very close touch with you. We send you our newsletters each week. We send you auction results from around the world. And when the time comes to sell diamonds, sell your diamonds, we will sell them for you. That's where we make our money. We get 10% of the profit only. So if we don't do well for you, we don't do well ourselves. The most important thing right now is safety. You know, the fact is that inflation is a money killer. If your income remains the same, but your cost of living goes up, that's inflation. And if you don't have investments that go up with inflation, that means that something has to sacrifice. All of a sudden, you don't go out for dinners, you don't go on vacation, you don't, do the things that you like to do, you don't go to the movies type of thing, because the cost of oil and food has moved up so high, and your income hasn't gone up, and now you're living in a inflationary conundrum, that affects your whole financial life. But if you have investments like gold, silver, and diamonds that go up when inflation hits, then you've got assets that are actually compensating for the increase in your living costs. If you're sitting in the stock market, you've got a double whammy because you've got heavy inflation and you've got stocks that are falling. So now all of a sudden the stress of living becomes insurmountable because all your investments are dropping and you're not living to above inflation. So again, we've been through this before, and you've got to learn from history. And history always repeats itself. And again, I've been through this in the 79 and 80 period. And we saw gold go to $850 all the way from $35 in 1972. We saw silver go from $1.50 all the way up to $52. And we saw diamonds go up 500%. So those are the three assets that you need to be in at this particular point if you're going to hedge against inflation. If you decide to keep your stocks, all that's going to do is the money that you make on gold, silver, and diamonds, you're going to lose it on your stocks. So my recommendation at the seminar, and it still stands today, is keep 60% of your assets in cash, get out of all of your stocks unless they're oil or gold stocks, and buy yourself a diamond or two and put it away for safety. These diamonds are the safest investment. My grandchildren own them for their future, and I would never, ever do anything that would not benefit my grandchildren. So, again, this is the best advice I could give at this point. What we're looking at are some of the most trying and difficult and confusing times that we're ever going to hit in our lifetime. Most of us are not old enough to have gone through the 1930s when we had the Great Depression. However, we are going to look at inflation that is going to make 79 and 80 look like it's nothing. And if we don't prepare for it now, we're going to never be able to take advantage of it. So, again, while prices are low in gold and silver, I recommend that we start to buy gold and silver if you don't already own it. If you do own it at a higher price than it is right now, then I would suggest averaging down and buying it physically. Own it outright. The other thing I recommend, which will save your financial life, is owning a diamond. Either a yellow flawless or an argyle pink. They're longer-term investments, but again, we're in this for the long term. In the next 5 to 10 years, we have a chance of making an awful lot of money. If I'm right, and I believe I am, we will see interest rates in the next 5 years up at around the 15 to 20% range. That's what happened in 79-80. I believe it's going to happen again. Could you imagine if we were the right investments? If we made all this money over the next 5 years in gold, silver, and diamonds, and interest rates went back up to 20% like they did in 1980, could you imagine just sitting back with a big smile on your face, collecting 20% on your interest on the money that you made when everybody else was losing. 90% of the money is made by 10% of the people. All Randy and I want is for our clients and listeners to be in the 10% that gets through these difficult times, and you're going to do that by getting out of your stocks and owning gold, silver, and diamonds physically. We'll get through these next 5 years, and we'll be able to have money to take advantage of our undervalued markets going forward.
RareColoredDiamonds.com is the website. RareColoredDiamonds.com. Speak with Harold about the featured diamond. This week's feature is an amazing 1.81 carat, fancy intense, internally flawless, cushion-cut yellow diamond. You can see the video on Harold's website under the featured diamond section. It is a must-have video, a must-see video, and a must-have diamond. If you're just starting your diamond portfolio, take a look at this diamond and get the story from Harold. Diamonds to outpace gold on Asian spending. It will open up your eyes to the potential of this market over the next 5 to 10 years. A Bain & Company report, very, very bullish on what's happening in the diamond market. They say from now until 2020, there's going to be a huge expansion in China, India, and the Middle East. Right now, they make up about 8% of the world when it comes to consumption of diamonds. That will jump to 40%. So it's a large number, and it's going to change the face of diamonds in the next 10 years. It's somewhere where you want to learn more about positioning yourself. Speak with Harold. Go to RareColoredDiamonds.com. You can connect with him there, or call 1-800-432-1022. Harold, we should mention hsfineauctions.com. You have an auction coming up on January the 16th, and that is 8 p.m. Eastern, 6 p.m. Mountain Time. And we should make sure everyone is anticipating that auction coming up on January 16th.
Oh, you bet. It's going to be a real showpiece. We're going to have amazing pieces on this auction, so you definitely want to go to hsfineauctions.com. You can sign up, get your password and everything. It's going to be at 8 o'clock Eastern Time. We're giving you an extra hour to get home and get settled, 6 o'clock Western. We're going to be offering gold pieces, silver pieces, emeralds, rubies, and sapphires, pink diamonds, yellow diamonds, argyle diamonds. It's going to be an amazing auction. Now, again, I built this auction for my clients to resell their diamonds down the road, to create a secondary market for our clients to do well. Obviously, at this point, the next 5 years to 10 years, we anticipate making a fortune in the diamond market. So what we're actually doing, no clients, or very few clients, are selling their diamonds at this point, but we do have amazing diamonds put away for our for the general public to buy. You need to go to HS Fine Auctions. You need to sign up and register. Within the first week of January, the whole catalog will be together. So you'll be able to view not only the diamonds and emeralds and rubies and sapphires and pieces that are going to be auctioned off, you're going to be able to view the GIA reports on all the diamonds, the grading reports on all the precious stones like the rubies and sapphires and emeralds. On top of that, there will be appraisals on certain markets, on certain items, and you're going to enjoy yourself. It's the only live, real-time auction site ever built. I'm very proud of it. It's taken us 2 years to build it, a tremendous amount of money, but it was built to create a legitimate secondary market for our clients to resell high-end collectibles. The first two auctions that we had were tremendous successes, but as we go forward, this is an area that you definitely want to pay attention to, especially at the beginning, because until we build up an audience, a large audience, and we get people used to using the site, there's tremendous bargains around right now. There was a green diamond that sold last auction worth about $200,000 that sold for $65,000. The reason that happened was because a very astute investor, knew the price of the diamonds and was able to bid on it and bought a diamond, fancy intense green, worth almost $200,000, and he paid $65,000. Now the seller of that diamond, just so you know, he bought a parcel of rough diamonds, and in that parcel happened to be this rough green. So he actually made a profit on it. The buyer of the green diamond bought it at a phenomenal price, bought it at a third of what it should sell for, so everybody was happy, and my firm was happy because we sold the diamond. So it's a phenomenal auction site. I'm very proud of it. My friends in Vancouver, Relentless Technologies, the very best at building sites, build this site for me. And again, there's nothing like it in the world that compares to our auction site. So again, we're the only company that you can buy these amazing diamonds from. We ship them directly to you. We keep in very close touch with you. We send you newsletters and auction results. When the time comes to sell it, we will sell it on our auction site, and we get 10% of the profit only. So again, if we don't do well for you, we don't do well ourselves. The only thing is that this auction site is built for my clients. If you're a client of Rare Colored Diamonds or you're a client of mine personally, we will look to sell your diamonds on our auction site. If you are dealing with any competitors, you're going to have to deal with them as far as selling your diamonds for you, because I guarantee every item that is sold on my auction site. And again, I cannot guarantee diamonds that are actually sold from other companies. So again, if you are going to invest in the diamond market, and I very heavily recommend that you do, you want to look at our company first, because not only do we have the top diamonds, but we also have the experience and the only way to resell your diamonds for you down the road.
The auction is January 16th, 6 p.m. Mountain Time, 8 p.m. Eastern Time. And that is an auction that is a must to take part in. If you haven't been a part of it before, go to hsfineauctions.com and sign up today. You do not have to bid to sit in on the auction. Well, you can obviously be a part of the auction, sit in, watch what's happening, but you do not have to bid. And as Harold has said in the past, there are plenty of spaces for everyone who wants to be a part of it. The auction, January 16th, 8 p.m. Eastern, 6 p.m. Mountain, hsfineauctions.com. To invest in diamonds, rarecoloreddiamonds.com, or speak with Harold at 1-800-432-1022. On the precious metal side of things, the company Harold recommends you use, a Canadian company in business for 10 years, Worldwide Precious Metals. Their telephone number, 1-866-623-2002. The website, www.pmc.com. Some of the quotes from our newsletter. Get our newsletter from Harold or Worldwide. Morris Hubbard said, "Be careful about thinking you can outsmart the gold bull. Price declines in every market. They happen all the time. This gold market has been hit with selling in fear, but it is a necessary cleansing process that puts gold into stronger hands. No gold investor enjoys this process, but gold should make new highs many more times before this bull market ends. Gold is the ultimate long-term winner in any debt crisis, and selling out because Europe's debt rose or simply growing makes no sense at all. All signals look good to see gold head to 2330 in 2012 and likely by mid-year." James Carrillo of Swiss American Trading Corporation said, "Technically and fundamentally, there is no damage to gold when you view the long-term trends. This decline appears to be nothing more than a healthy digestion or consolidation of gains. This movement should actually prolong the long-term trend as it builds a new support area." Jeb Handwerger said, "The cash is king crowd is at the height of its popularity. Investors have been selling precious metals, hoarding cash and treasuries instead. This will change. Already, the European Central Bank is literally seducing troubled financial institutions, dangling new printed money before their waiting eyes. Essentially, the ECB has inflated their books by 20%, and this may only be the beginning, as the morbid European economy will require further oxygen." Also from the Wall Street Journal, something to keep in mind, gold actually is positive on the year by around, and it's hard to say as we're taping the show on December 30th, where it will finish the year, but we're looking at about approximately a 10% gain for the year. Let's keep that in mind, and that's outdoing most investments. Gold has outrun the Dow pretty handily over the past few years. Over the last 2 years, prices of gold futures were up roughly 41% versus a total of 22% for the Dow Industrials, and over the last 10 years, gold futures are up 465% versus 54% the total return for the Dow, according to FactSet, that from the Wall Street Journal. And Harold, one thing to keep in mind, gold is positive on the year. You have made money in gold this year if you were a buyer at the levels at the very beginning of the year. We have about 30 seconds left, Harold. Any closing thoughts?
Yes. Again, as we go into this new year, 2012 could be a very, very dangerous year. We need to keep our heads about us. We need to be smart about this because, again, one wrong move can hurt you financially. We need to be in hard assets. That's what history tells us to do. Gold, silver, and rare colored diamonds will get us through these extremely difficult times. And again, lighten up on your stocks, get into these areas, and let's fight this battle together. Randy and I truly appreciate you listening to us in 2011, and we look forward to a fantastic 2012 together. Randy, it's been another great year working with you.
Great year working with you. It was good to do the seminar in Edmonton, and thank you for your knowledge for another week, Harold.
My pleasure. I'm looking forward to 2012, and we're going to be going to Toronto to take our show on the road there.
The website to invest in precious metals, wwpmc.com, 1-866-623-2002. For diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. And don't forget hsfineauctions.com, the sale coming up, the auction January the 16th. Be a part of that auction. And if you're wondering what's happening in the markets, need guidance, listen to the radio show, and get our free weekly newsletter from Worldwide or Herald. That's it. Have a happy new year. We'll talk to you next year. That is another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you